Hi, and welcome again to another edition of Market Analysis for today, January 10th of 2025. I'm Gio Bencourt. This is a recording done by Vantage Markets. We're going to do it today about 2 hours and 15 minutes prior to the U.S. session open. Today we're going to be having the first non-farm payroll reports coming out of the states. We see that U.S. stocks futures were retreating before the market opened, and the bounce from the start of the year is quickly fading away. There are several reasons for the sour mood on Wall Street. The biggest is the recent surge in longer-term bond yields, which is increasing borrowing costs for companies and making stocks less attractive relative to bonds. Now, also the renewed talk from President-elect Donald Trump about tariffs and concern from the Federal Reserve that inflation may prove sticky are also weighing on shares. So today, the big data point will be the monthly non-farm payroll reports, and consensus has it right about 157,000 to about 175K, down from last month's reading of 227K. Now, a strong number will further shift expectations that the Fed won't cut interest rates as much as previously thought, which is bad for stocks. A weaker figure might feed optimism that the Fed can continue with a few more rate cuts at the start of the year, which implies it can be good for stocks. For now, overwhelming consensus is that borrowing costs will stay unchanged at the Fed's January 30 decision. So with that being said, let's take a look at what we can speculate for today's Friday's TGIF fluctuation. Again, I want to remind you that the market at where it's sitting right now, it has moved that 10% correction from its all-time high from 22,423. You multiply that by 10%, it'll give you somewhere right around 21,180 points for the NASDAQ. And so therefore, we are at that correction level. Today's jump numbers will obviously also impact how this will move. And so therefore, be on the lookout. Now, we want to be able to understand that Trump would be coming into office in about 10 days. So therefore, can the market continue to correct and do a deeper correction? And will that deeper correction turn into a downtrend market, a bearish market? And for that to happen, we will have to have moved 20% from that all-time high. So for those who are aggressive and for those who like to sell the market, this is a good opportunity for you to come in and analyze the market and take a look at your trading strategies to enter the market short. So taking a look at the S&P 500, well, the S&P 500 is not even close to that 10% move into correction territory. We still have a whole lot of market trajectory to report that. So again, given these consensus and given the market sentiment right now, that could happen. Also, I want to remind you that we are going to start basically the fourth quarter earnings report. So that could also bring some more volatility to the market. You want to take a look at the VIX, keep that VIX in your radar. So that's something of importance. So for right now, again, the market may be looking into a correction scenario. Dow Jones Industrial has been doing a horizontal lateral movement, a coughing off congestion, as I call it, equal highs, equal lows. A breakout from here can be anticipated to the upside, to the downside. The jobs number will obviously also have something to say. Intraday movement, so keep that in mind. The 50-day moving average has been just right on spot. You see how the 50-day moving average, the market has fluctuated around it, above it, below it, but are staying close to it. Right now, the market sits above it for the Dow Jones Industrial, and the RSI is way below 50. So again, will the numbers spike the market? Will it bring it down? Well, we'll that's for you to come in and see and analyze for yourself. Boom, crude oil. I told you yesterday, I said yesterday, I am bullish on crude oil, and look at that parabolic movement. So this will bring us to a $77, probable level of resistance, and then I'm just gonna do by 50 cents, 75. Now it could just that be it. It could be it for today, and it'll just start trading lower. But then again, you just never know. So therefore, this movement from the open, actually from the low 74.175 to this highest, which is 76,680. So that right there, it'll be 2 points and what, 2.5 points. So 1.25 points. It'll be the halfway of that. So 1.25 points, we would say 75, about 35, somewhere around there. You just make the calculation. It's Friday. So that's where I'm going to set my level of support, which we could use that swing high. Boom, that's nice. We just use that swing high, which is basically almost right. No, the smack on this one. So that could be your first level of support, where I want to speculate that the market will do if there's a retracement of the market. Okay, the job number comes out, and for whatever reason it is. We'll see volatility in here, but if the market does happen to retraces, will the market rebound from that level of support in reverse, or will the market trade lower, do a pullback, and then continue, or will the market trend lower, okay, do a pullback, kind of a head fake, and then continue its trajectory upwards, or will the market just continue to the highs? That's things that we want to be able to identify and understand. So the second level of support for today is going to be that psychological $74 number. Okay, so there we have our levels for. So going with the trend. The trend is your friend. Don't fight the Fed. That's another thing that I want to keep you want to keep in mind. So Nat Gas, $4 is right around the corner. That swing high of the end of the month of last year, however, is their target. Will we reach it? It could, because parabolic movements will make it there. But I am long Nat Gas. I said that at the beginning of the week. So if you go into our YouTube channel, Vantage Plus, and take a look at my previous videos, you'll see that I spoke about that level on Monday. Then we have here gold. Gold today is going to be interesting. So gold usually moves when this number comes out. So I'm just going to use 2650 as my second level, and 2660, just 10 points, as my first one. Resistance, the Bollinger Band, the upper Bollinger Band, and 2700. I try to make 2700. There you go. Okay, 2700 as my second. So let's see if that puppy will spike higher. I am positive. I'm going with the trend. One tool that you can use, just if you don't want to do it by eye, just measure the trend to the high that it moved to the low that it made today, and you'll see that you can use the Fibonacci numbers, and the Fibonacci golden ratio is where the markets where that is used for to say that where things come to. So that could be your target, which sits right below the 2700 psychological round number. So you can use that. So again, being bullish, long buying gold. Silver is the 50-day moving average is acting seriously strong. You see how the market has come towards it almost yesterday. If we get above it, it closed on a flat line yesterday. But again, today it will be a different story. This second level is a bit too low. I'm just gonna use the swing low, and therefore there we have it. So I'm still long the the metals. Copper, look, copper yesterday violated that level of resistance 430. Today the market came towards it and it just rebounded off of it. So I'm going to use a 50-day moving average as my second one, but my first one is going to be the open of yesterday right around here. So let's see. The first resistance, I'm going to use the swing high from yesterday, but still, yep, moving along higher. So keep that in mind. Bitcoin. So Bitcoin is looking to, I'm going to use the lower Bollinger Band and that 50-day moving average. So 90,000 is going to be your first, also your first level of support for Bitcoin. The 20-day moving average within the Bollinger Band is acting as a dynamic resistance. So keep that in mind. Will we see a spike on it? Let's see what will happen. The currencies, euro is kind of flattish, sustaining itself around 103. So that's good news for the euro, but let's see for a rebound today. In that perspective, the pound also looking to sustain itself north of 123. Let's see if it will do so. And the dollar index will see a spike or a drop, depending on the number on this. So if we see a drop, a drastic drop on this, we'll see a spike on gold, on the metals, on the currencies. But if we do see a parabolic move to the upside on the dollar index, we'll see a retracement on the most likely the currencies and the metals. Have a great weekend, and I'll see you on Monday.